$2.33 million, new all-time high in the public count here today, up a big number here today. Congrats to everybody hitting new all-time highs out there in your portfolio. And if you're in the right stocks, you're hitting all-time highs. If you're in the wrong stocks, you might be hitting all-time lows, or it might not be such a good market. This is a very diverged market at this point in time. We've got 12 stocks to speak about here today. I want to talk about all 12 of these. Meta stock had a huge day today, up about, we can call it about 6%. We're up about $50,000 on Meta. Here today, Tesla continues to roll. This stock closing over $250 at this point in time. That stock rolled really quickly to $250, right? Amazon just closed at $200 here today. We're going to speak about Amazon. Palantir, this stock up another 5% here today. Where's the guy in the comments that's always saying Palantir is going to be 30 plus by the end of the year? Hey man, you're looking pretty good in regards to that. Lululemon, 41% plus down this year. Absolutely brutal. Zoom Communication down another 18% so far this year. Sofi stock down 33% this year. It just goes lower and lower and lower. Wynn Resorts just hit a new low for the year. Stock's only down 4.4% for the year, but that's a new low for Wynn this year, right? Look at Celsius Holdings. Celsius Holdings just in the last 7 weeks is down over 40%. It's lost over 40% of the company value in 7 weeks. What's going on here? Starbucks down 10% on a 5-year. It's down just about 8% in the past month. Estee Lauder seems to hit a new low after new low. The once most respected cosmetics company, beauty company in the world, it can't do anything right. Stock's down 46% in the past year. Fubo's down 40% in the past year. Listen, we got to talk about all 12 of these stocks in this video here today. I'm going to tell you what's going on with these stocks, why they're doing great or why they're doing really bad, and where these stocks are headed and what needs to happen for these stocks to either, let's call it transform to the other side. Okay, so we got a lot to go through in today's video. Appreciate everybody being here. As always, thanks so much for being here, folks. I'm showing up on a Friday for you guys on July 4th weekend, so I appreciate y'all, and I hope you appreciate me coming out here today. I appreciate the 10,000 plus new subscribers we have got on the channel so far this year. So yeah, that was a very good first half of the year for the channel, and I thank you all for being here. And if you're not subscribed, you can check it out. Look on your phone right now, look on your iPad, look on your Mac, whatever you're watching this on, and make sure you're subscribed here to the channel. If you want to learn from me on a deeper level, my private group, that will be the pinned comment down there, access to all my best course curriculums, access to the 6- and 7-figure Discord chat, access to exclusive videos. I actually just released a video today for the private group going through, I was considering selling $60,000 worth of a stock here today, and I went through in depth kind of my thoughts on why I was considering selling. I ended up not making that move, but I considered. I also kind of changed some things in regards to how I'm hedging. I ran through that in that video here today. So yeah, very valuable. If you enjoy my videos here on the channel, you'll enjoy my private group twice as much, okay? All right, guys, let's get into this. So, Meta. We're now up over $700,000 on the stock, up $716,000, up another $50,000 plus, okay? Listen, this is very important. Everybody understands this in regards to Meta. Check this out. This is since the beginning of April. Meta has lagged the market since the beginning of April. Now, I know that's hard to fathom. Like, you see Meta making these moves, and you see the stock going up and up and up and hitting new all-time high. I believe today was a new all-time high. Yeah, it was a new all-time high, right? And you look and you're like, how could the stock have lagged? It factually has lagged since the beginning of April. 2% gain is all we're looking at here on Meta versus S&P 500's around 7%. The NASDAQ, the Qs are at 12%, so about a 6x of what Meta's done. That's pretty fascinating, right? But here's why. It had an absolutely parabolic move, and it needed time to take a breather. Actually, kind of similar to what's going on with NVIDIA stock right now. NVIDIA's kind of taking a breather right now. Their parabolic move was ridiculous, absolutely ridiculous. From basically the fourth quarter of last year, right around kind of November-ish, right, into that April, the beginning of April. That was ridiculous. The stock just went to the moon, as they say, right? And so sometimes you need to chill out as a stock. You need to take a breather, and that's honestly what Meta's taken. But now it's got its energy back, and the stock is climbing and climbing and climbing. The important thing to know about Meta is the stock is not expensive. You look at the stock on a forward P basis, 26, 2-year out forward P basis, 22. And very important to check this out here under advanced metrics for 1000X. Last year, earnings per share growth, 78%. Trailing 12-month versus next 12-month earnings per share growth, of 25%. Current quarter earnings per share growth versus the previous year, 65%. And the 2-year stack expected earnings per share growth is at 59% for this company. A 2-year stack, and these are metrics you're not going to really find anywhere else, just to be quite frank. A 2-year stack expected earnings per share growth at nearly 60% on a stock that's at a forward P of 26. Steal deal, okay? I love this. In our stock market memes inside the Discord chat and the private group, Carson posted this. Meta shareholders 22, yes, that was me. I was going through it, man. I was getting destroyed, and I was buying the stock, and it just kept going lower. Meta shareholders 2024 apps, dang-lutely. Reminds you a little bit of Tesla Myesla, right? Tesla Myesla up another $8,700 here today, up $380,000, up 813% on Tesla stock in the public count. And, I try to tell people, like, when this stock moves, it really freaking moves, and it moves way quicker than anybody's anticipating. On a 1 month, the stock's at 43%. 43% on a 1 month. Guess what? They didn't even release earnings. They didn't even release earnings in the past 1 month, and the stock just moved 43%, right? Here is a picture of Tesla stock. You got to understand, when Tesla stock is very similar to a train, and once a train gets moving, ooh, it's moving, okay? It might take a little bit to kind of get it into motion, but once those wheels are spinning, ooh, look out, okay? Now, here's what we have going on at this point in time. Because Tesla's made such a big move, the stock's very controversial. It's always been that way, by the way. It's actually less controversial nowadays than it was 5 or 10 years ago, I can tell you that much. But, you got people fighting. This guy says buy. Tesla stock roars with an almighty charge. Technical analysis. This person says sell. Tesla share price surge makes no sense. It's clearly overvalued, right? And you got these different folks kind of going back and forth. And that's what you're going to have in Tesla stock now at this point in time. But I think to the people that are bearish on Tesla stock, they got to understand that in 2025, we know 2024 is kind of a lost year for the stock. And not for the stock, I should rephrase that. It's a lost year for the financials of Tesla. Like, we're not going to see anything exciting this year in terms of revenue growth, net income growth. We know that, right? But 2025, it starts again, okay, in terms of Tesla's exciting net income opportunity. And here's the deal with Tesla's net income. 2019, they had an $862 million loss, and they flipped that to 2023. They had nearly $15 billion in net income, right? 2024 is basically guaranteed to be a down year for net income, but then we should get back to growth in 2025 and beyond. And what's very exciting about that, is imagine what Tesla's net income is going to go from 2025 to 2029, right? And so the PE ratios and those sorts of things, they could look expensive right now, but just understand Tesla can eat that up very quickly. Look what they did in this little span here. Imagine what they're going to do in the next 4 or 5 year span. It's going to be tremendous, right? Well, once again, 2024 is a lost year on the net income side. 2025, we get back to growth, okay? And so, I'd put it like this. You got to get out of the way of the train. When the train's rolling and Tesla, the train is rolling, you get out of the way and you let it do its thing. Too many short sellers, too many of these folks, they like to try to jump in front of the train when it's rolling, and it's like the best move you can make is either hop on the train when it's moving that fast or just stay out of the way, okay? That's the bottom line in regards to this. Now, I had a really good kind of hedge in regards to Tesla late last year and into the beginning of this year, right? I acquired these put options on Tesla back October 17th, 2023, and then I got out of these ones January and February. This was in the public account, right? And I made $6,400 in a pretty quick amount of time and got a great return on that. But the reason was at that particular time, I knew the story with Tesla was going to get worse. The issue you have if you're trying to bet against this stock now is the story is likely going to get better and better and better. So you don't have what I had when I got to hedge against the stock and make really good money on it. So just a little food for thought in regards to that. If you think like this gentleman's thinking, Tesla stock price is clearly overvalued. You got to know when to kind of hedge against these. It's kind of the way I think about Chipotle right now. I think Chipotle is an attractive hedge. I might be wrong on that. I could be wrong on that, right? But the bottom line is Chipotle's had a lot of bad publicity. They have a super high 4P on the stock of 55 for a burrito chain, right? And you can't just short for valuation. You can't just do that. But if you have other things to tack on, then you might have an attractive hedge opportunity. So bad publicity compounded with a 55 forward P, and then wage pressure that's going to really start hitting them this current quarter they're about to report, and then over the next few quarters. That should be interesting. And then they might have to go through a big advertising campaign to try to wash out this bad publicity they got, and that could be very, very costly to the company, and that could really hit margins and hit profitability in a substantial way, right? So, we'll see what happens there, but that's a way I kind of think about that. But when the train's rolling, get out of the way of the train. The good thing for Chipotle now, the train has stopped, right? And now we're just kind of waiting and seeing, like, is the train going to roll again, or is the train going to start going down in a substantial way? Speaking about trains, Amazon's a train now at this point in time, $200 stock price. Check out this meme here. Oh, you gotta love it, right? You gotta love it. Oh boy. Now, here's the important thing to understand about Amazon right now, okay? Listen, the company's in a growth cycle right now. They're not in a shrink cycle. So this is looking at their revenue. And what we're looking at here is 2022's latest quarterly revenue versus the 2023 versus the 2024. So from 2022 to 2023 quarter, they grew revenues 9%. But from the 2023 quarter to this latest quarter, they grew revenues 12.5%. It's very exciting. That means the growth at Amazon is back, at least for now, right? Which is a very exciting time period to be an Amazon shareholder. Now, additionally, maybe even more exciting is the quarterly net income. So if you look at quarterly net income, they went from $8.1 billion of net income to then negative $3.8 billion of net income, which was a disaster when they went from 21 to 22, right? Complete disaster. And then they raised up that net income massively. They went from $3.8 billion net loss to a $3.1 billion net income. It's a $6.9 billion plus change, right? But then, in the latest quarter, right, versus last year, they raised up that net income $7.3 billion on a year-over-year basis. It went from $3.1 billion to $10.4 billion. And this is a much more impressive number, not just because it's a bigger number, but because when you go from a net loss, and you're usually a net income company like Amazon's been, and you go from a net loss to a net income, it's not nearly as impressive as when you're already back to net income, but then you just explode it much higher, okay? So that's a deal with Amazon, right? And you might look at Amazon, you might think this is a rich stock. Forward P on the stock of 46, 2-year out forward P likely 32-ish, right? But here's the deal. The current year expected earnings per share growth of this company is 53%. The trailing 12-month earnings per share growth, by the way, is 749%. The next year, earnings per share growth is at 24%. For this company. So, the moral of the story in regards to this Amazon situation is you can't really call this stock expensive when they're expected to grow at these sorts of growth rates when it comes to earnings per share. Another one you just kind of got to get out of the way of, right? Palantir, save your tears. We're now up over 200% on the stock, up $102,000. This stock continues to beast. Another $7,600 here today, okay? Palantir. Wedbush analyst Dan Ives recently named Palantir as one of his top picks for the remainder of 2024. A tidal wave of $1 trillion of spending will come to the shores of the tech sector, Ives wrote in a note. Now, I posted this inside the private group Discord chat on, I guess it was July 1st, okay? And it was interesting, I saw this out there, and basically they showed Palantir right alongside of Google, Apple, and Microsoft. Like the $1 trillion boys club, right? And then there's Palantir right in there. And I just thought, like, that's insane. Like how far has Palantir come to even be in a graphic like that and be shown alongside those $1 trillion type companies, right? Absolutely fascinating. And so you got to understand there's a dynamic shift that's going on at Palantir at this point in time that is very, very exciting because Wall Street's starting to wake up to the Palantir story and they're starting to jump on board. Keyword is starting, right? This is still pretty early days in terms of Palantir as a public company. I've only been a public company for a few years now, right? Oh my gosh, and this one of the private group members posted this of Amit, me outside on my porch looking at my Palantir position right now. Oh man. Oh, by the way, Amit, if you see this, man, 24 laughing faces, that's a lot. That's a lot of laughing faces, so good job on you, okay? Now, in all seriousness, this is what's very important in regards to Palantir. And if you want to know why this stock just continues to go higher and higher and higher, look no further than this. This is a year-over-year quarterly growth. And what we've been on for the last several quarters is basically on a sequential basis, growth rate keeps going up and up and up. And it's happened 3 straight quarters now, right, where the growth rate's gotten higher and higher. And I would say there's actually a pretty high probability that for a 4th straight quarter, on a sequential basis, the growth rate's going to go even higher. So this quarter, they're going to report here in about a month or so. Likely, the growth rate's going to be even higher than the previous quarter. And I think there's a decent probability the next quarter be even higher. And so as long as Palantir's sequential growth rate is going up and up and up, and as long as the management team's kind of like forecasting that it's going to keep going up, right? Palantir remains in basically, it's a train. It's like Tesla right now. It's a complete train. And until this company's growth rates start going down on a sequential basis in a substantial way, you just got to get out of the way of this one in terms of trying to bet against it or something like that. Because like I said, I think there's a very high probability growth rate. It goes up even higher next quarter and probably the following quarter as well. So very, very exciting. Palantir continues to roll, and the person in my comments that's always saying Palantir is going to be 30 plus end of year, I think they're probably going to be right on that. I'll just be completely honest with you guys. Probably going to be right. Lululemon, 41% down for the stock year to date. It's getting absolutely obliterated, right? Here's the thing you got to understand about Lulu. This company was in mega growth mode. Look at the growth. $4.4 billion of revenue to $6.2 billion of revenue to $8.1 billion of revenue to $9.6 billion of revenue, right? But here's the issue with Lululemon. A lot of people are questioning where growth is going to be at for these next 3 quarters specifically, right? And so this coming quarter, they're going to report here in the next month or two, right? Analysts were at about 10% growth, and I think there's a lot of questions about can they grow at that sort of rate? Right? The following quarter, 11.5% growth is expected, right? And I think there's a lot of people that are very concerned about that number after Nike's weak guidance. Nike had a very weak guidance number, and so a lot of people are looking at Lulu like, you aren't going to hit those sorts of growth rates you think you're going to hit, right? And then the following quarter, which is kind of around, holiday time, almost 14% revenue growth. And they came off a really hot holiday season last season, right? So there's a lot of real questions about Lululemon if they're going to hit these growth rates. And there's a lot of concern out there. And if they don't hit these growth rates, the stock's going to go below 250, right? And start pushing down toward that 200 level. And then just, you'll eventually get a capitulation type washout in that stock. But, it's in a very tough place. And then you'll start having a lot of questions about what's the future for Lululemon, especially if they ever report a down quarter on revenue. If that was to happen, people would absolutely freak out in regards to Lululemon. It's one thing if they, miss slightly, but if they ever come in, let's say 11.5% growth was expected, and they come in with 0%, people will be asking questions about, does management need to be replaced? Like, what's going on with this company? Just got to understand we're going through a consumer recession right now. It's going to last at least to the end of this year, in my opinion, in regards to that, right? So consumer companies are just in a tough place in the short term, right? That's just the way it is. Zoom stock continues to be in a tough place. 18%, the stock has gone down year to date. And in regards to Zoom, I really actually like the stock at these levels. There's so many opportunities out there. It's like, I would love to buy some Zoom. It's just, do I buy that over Nike or something else, right? But here's the deal if you want to know if Zoom stock's going to start going up. Zoom stock will start going up when this happens. When this stock needs a clear catalyst. When this stock gets a clear catalyst, and what I mean by this is Wall Street needs more than just numbers to go off of, okay? So when I look at a stock, I'm thinking about income statement. I'm thinking about the stability of the business model. I'm thinking about the balance sheet. I'm thinking about the actual products the company has. Zoom needs a catalyst, a clear catalyst that gets Wall Street excited. Because Wall Street they don't really care that much about income statements, balance sheets, unless you're kind of like a more traditional fundamental-based investor, right? But a lot of Wall Street's not that. They're traders. They're looking for momentum. And so for Zoom, they don't have any clear momentum right now. They don't have any clear catalyst. If Zoom can get people to understand the phone opportunity here and how AI is going to help their business and make their product even more sticky with recap and meetings, phone calls, all those sorts of things, right? Then I think Wall Street will start to gravitate toward the stock, and next thing you know, you see the stock at $70, $80, $90, $100, right? But until that clear catalyst comes, you just can't get Wall Street to buy this stock right now. And that's why the stock continues to flounder again and again and again, is there's no clear catalyst there. That leads us to Sofi, right? This is another stock that just can't get out of its own way. The stock's down 33.3% this year. It's at $6.47. I mean, it's got to be frustrating for folks to see Palantir going huge, Meta going huge, Amazon going huge, right? Tesla going huge. A lot of these stocks, and SoFi just is like dead right now, just completely dead, right? So what's going on with SoFi? Well, you got to understand it's much bigger than SoFi. Here's what's going on with SoFi, okay? Credit card delinquencies continue to go up substantially, right? We're going to get the latest quarterly numbers out here very soon. I highly bet that credit card delinquency is going to go up even higher and higher and higher for at least the next 3 quarters. So meaning Q2, Q3, Q4. I'll say extremely high probability. I think 2025 is a wild card on what happens with credit card delinquency rates. I would say there's a pretty decent probability you'll see credit card delinquency rates start to actually drop in 25. But for now, the bottom line is the picture is going to likely get worse and worse and worse. And when you have something like that going on, a lot of people get freaked out of these smaller financial institutions like a SoFi, like regional banks. They don't want any piece of these. And so it's what we have going on right now. And once you see delinquency rates start to go down and the picture gets a little better, then you're going to actually start to see SoFi stock recover quite dramatically. But for now, as it's getting worse, just a lot of people don't want to own this stock. They don't care if it's $4, $5, $6. It doesn't matter. The bottom line is a lot of Wall Street's just looking at this from the perspective of, delinquency is going up. We don't want to own anything that's seen as a risky financial institution, right? So that's their view. Wynn Resorts, this stock, 4.4% down this year. The numbers have been tremendous, right? The stock just set a new low for the year here today, right? Like, what's going on here? It's the economy. It's worries about the economy. It's worries about this, and that eventually affecting travel in a very negative way, right? That's the bottom line in regards to that. And also when you tack on no clarity in regards to where rates are going as of right now, right? Which these sorts of companies are very rate sensitive. That's why the stock's at a new low for this year. I mean, it's a great opportunity for somebody like myself that's a long-term investor in these sorts of companies, right? To pick up shares of a quality, insanely quality name. That's the thing about this market we got to understand. There's a lot of incredible quality companies that you would really want to hold for the next 5-10 years that are trading at massive discounts. And you've got to take advantage of these deals. And they're all over the market right now, right? Celsius Beverage, holy smokes. 7 weeks, and the stock's down 40+%. Like, what is going on here with Celsius, right? This was one of the hottest stocks. This was one of the best, and it's still probably, even though its stock's fallen 40% in the last 7 weeks, it's still one of the best performing stocks in the entire stock market the past 5 years. Absolutely incredible historic run the stock had. But now things have changed, right? Here's the issue, okay? So if you look at this company, the analysts have not set this company up in a good situation. I'll just be honest with you guys, okay? So basically, Celsius has to come in and report better and better and better growth rates as the actual numbers get bigger and bigger. That's a tough thing to do. Usually what you're going to see is as a company's numbers get bigger and bigger, revenue numbers, the growth rate's going to go down over time. So let's say usually you see this reverse, like 29% growth expected for this quarter, 27% for the next quarter, 25% for the next quarter, then 23% for the next quarter. That's what you would usually see. It's not a comforting feeling to see 23%, then accelerate to 25%, then accelerate again to 27%, and then another acceleration to 29%. If that happens, great. But there's a lot of questions, especially with a lot of these, channel checks. Basically, there's a lot of, I don't say there's a lot of companies, but there's 1 or 2 very specific companies. Nielsen's one of them that track basically how sales are coming in for these sorts of products. And from my understanding, it's not going very good. And it's kind of a little secret way of getting almost like inside knowledge of what's actually going on with these sorts of business models, because they can see how many times the barcodes are being scanned like that. And yeah, it is legal and you can get access to that sort of data. It's very expensive. But from my understanding, those readings are not coming in good for Celsius. So something's hurting those sales, at least in the short term here. And I don't know if that's a problem over the next 10 years, but it's a problem in the short term from what I'm hearing. And that's why the stock continues to go down. And so if you're wondering, like, why is Wall Street just continue to sell the stock off? Well, if you're getting that inside data that sales aren't good, then you're looking at these numbers and you're like, wait, they're not going to hit, because they're going to have to, sell through all the product that's in the stores, and then the sell-in might not be as strong, which means their revenue might not be as strong, right? And there's also a little bit of a telltale sign, because this came out here recently, and the energy drinks giant Celsius considers moving to food and water. Now, it might seem exciting at first because it's like, oh, Celsius is expanding into new product categories. One, that doesn't mean they're going to be successful in those categories. They could lose a bunch of money. Imagine they spend a bunch of marketing on some food products that they're going to try to come out with, or water products, and they flop and they fail, and it hurts margins and it hurts profitability. But that's not you got to think about this on a little higher level, right? If you're running a business, you're usually not thinking about going into new categories if your growth rates of your current business are phenomenal, right? It could be possible that the CEO is maybe seeing sales slow quite substantially, and he's like, crap, man, we got to do things, we got to get into new product categories, we got to get into new areas. And so maybe he's looking and he's like, we got to get into food categories, we got to get into water categories. I don't know. That's just something to think about, and it's something to consider out there, right? Now, additionally, when Monster, basically Coke invested in Monster back in 2014, okay? And this was after Monster already had its Monster run with the stock price, right? But it was interesting because back then, when I owned the stock, it was called Hanson's Natural Beverage before they switched the name to Monster. And they didn't just have the Monster brand, but they launched other brands. They had the Hanson's Natural Sodas. They had this Peace Tea line, which was going to try to compete with Arizona Tea a little bit, but at a little bit of a higher price point. They had these Hubert's lemonades that were pretty good. I enjoyed those back in the day. They had their traditional juice products. And basically, when Coke bought that ownership stake in a Monster, Hanson's gave them all those other brands. And then Coke gave the energy drink brands to Monster, like NOS and Full Throttle. And so Monster nowadays, they own Monster, they own Reign, they own Bang Energy, they own NOS, and they own Full Throttle and a few other brands, right? And so sometimes it's better for a company to just focus on what they're actually really good at rather than a million different things, right? So just a little food for thought in regards to that. But I have a secret reason. I like to always think another level down, right? Like I just took you, it's a business masterclass here, folks, today. You're getting lucky to see this one. I just took you on a deep level right there. I'm going to take you a level deeper on why people don't want to own these stocks right now. We're going a level deeper here, okay? Listen, here's a secret reason. The unemployment rate has started to go up, okay? We're up to 4.1%. Now, if you are about to go through a big unemployment cycle, let's just hypothetically say we do go through a big unemployment cycle over the next year, and let's say unemployment rate goes to 6%, 8%. Well, there's not as much of a need for energy drinks when the unemployment rate's much higher, right? Which weighs on the growth rates of these sorts of companies. And so if you were thinking, oh, Celsius is a company that's going to grow 30% a year, if the unemployment rate goes up a bunch over the next 12 to 18 months, then it's very possible that Celsius is only growing revenue at 10% or 5%, which completely changes how you value the company, right? This is very, very important what I'm taking you through here. And so I think it's kind of like a secret reason why these stocks are struggling so much, because people are like, oh boy, we're about to go into an unemployment cycle here, right? Now, if you look at Monster, right, check this out. So in 2008 through 2010, revenue didn't go up that much for the company. Then keep in mind, this is back when Monster was in its major growth days. Like this was when Monster was getting into all these different stores, and it was starting to become a big brand that people knew, and it was like started to become viewed as like the competitive threat to Red Bull. Like this was a big time for Monster, 2008 through 2010. But the growth rates were pretty disappointing. They didn't even grow revenue 30% during that time, right? From 2008 to 2010. Why? Was there something broken in Monster's business model? Did people decide they didn't want energy drinks anymore? No. We had a major unemployment cycle, right? But then, look what happened once unemployment got back on track. 2010, $1.3 billion of revenue, and they went all the way up to $2.06 billion in revenue by 2012. Well, guess what came back? The employment market, right? And so a lot of people, and you got to understand, a lot of people that drink energy drink products, it's not just like business professional types that are making $150,000 a year. It's a lot Blue collar workers. It's a lot of blue collar. I remember working at Quick Trip back in the day, and I remember, working at 4 a.m., 5 a.m., 6 a.m. in the morning at Quick Trip, right? And I remember the amount of landscapers and just other, in those sorts of fields, right? Blue collar type fields that would come in and just buy Monster 2 at a time, 2 for $3.50 or 2 for $3.33, whatever our deal was back then, and they would just buy them and buy them and buy them. And so when it comes to these energy drink companies, you got to understand, a lot of people are buying those drinks because they're going to work and they feel like they need those sorts of different products. I was at a oyster bar in Ventura, California. This was, 2 or 3 weekends ago, right? And sitting there, and we were talking with the guy who was doing the thing with the oysters and whatever, opening up these oysters, and then a little while later on, another worker comes over and he just started his shift, and I overheard him talking to the other guy, and he's like, "Oh yeah, I just slammed." I don't remember if he said it was a Monster, if it was a Celsius, but it was some sort of energy drink. He said he just slammed that. And he's like, "Man, I feel kind of like jittery right now," right? But you got to understand, that's who's buying a lot of these products, right? It's people that work in the restaurant field. It's people that work on landscapers. It's the people that are building the houses, right? And are building the pools. And if all of a sudden, sales of all that stuff go down, jobs are lost there, and then there's not as big of a need to buy those sorts of products. And so it's high level stuff, folks, but there's reasons this is going on. You might think, well, maybe it's just Celsius stock that's going down. Nope. Look at Monster. Monster is down over 15% year to date, right? Now, Monster is way bigger than Celsius. So Celsius is going to be way more volatile in terms of the stock price, but Monster is a monster, right? And so, to get that one to go down 15% so far this year, there's reasons going on behind the scenes that these stocks are making moves like that, right? Starbucks. This stock's down 10% on the year. It's down about 8% just in the past month. This is another one that can't get anything right? That's another one you worry about if there's an unemployment cycle. What if just 2% less of customers are coming to Starbucks? What does that mean for Starbucks' revenue, right? That's something to kind of keep in mind there, right? And, I talked about Starbucks in 6 Stocks I'm Buying video that came out one day ago. It looks like 37,000 of you got to watch that video so far. So if you didn't get to check out that video, Starbucks, spoiler alert, Starbucks was one of those 6 stocks I talked about in that video. So you can check that out here on the channel. A day ago I posted that. Estee Lauder stock, new low after new low for the stock's down 46% over 1 year. This stock is very interesting to me. I would love to start a position in this one at some point here, especially if it breaks 100. I'm going to have to start buying this stock. But my thing about Estee Lauder, I think this one's actually looking pretty good. I think it's going to form a multi-year bottom in the second half here. I don't know if that's like in the next couple weeks or more like in the next couple months, but I do believe this one actually forms a multi-year bottom here in the second half of the year and then starts to go up from there. And I think Estee Lauder actually positioned themselves very well for 2025 and beyond. And the growth rates are going to come back for this company, and I think the company will be looking good. But for now, it's in a brutal place. Fubo, $1.25, speaking about brutal place, down 40% in the past year. So Fubo, if you look at Google Trends, it's picked up a little bit here recently because of the soccer. There's a bunch of different soccer events going on and whatnot. And that anything, and keep in mind, soccer is not as big in the United States as it is in Europe and in other regions, so it's not going to see as big of a benefit. And this is just looking at United States, Fubo, Google Trends. But the bottom line in regards to this is it is at least somewhat boosting. And anytime there's a sporting event that's big of some kind, it boosts Fubo's business model, right? Now, the Olympics are starting in about 3 weeks. That should boost Fubo. And then late August, we got college football starting, and then NFL starts in September. So July, August, and September, the next 3 months, we have a lot of exciting things going on at Fubo, so we should see that Google Trends continue to pop. But let me be very clear about about Fubo. This is what we need here. Look at this. This is a trailing 12-month net loss for the company, right? It's coming down and down and down and down and down. And so what we need to see now is another lower number for this quarter they're about to report. The big question is, how much is a lawsuit costing them? The one that's against Disney and Warner Brothers and those guys and Fox, right? We need to see these losses continue to come down, because if we see the losses continue to come down, then people won't be worried about going BK. And then if people aren't worried about going BK, the stock is going to make an absolutely epic move. The reason the stock is $1 a share, let me be very crystal clear about it, is strictly because people are worried that this could be a BK company in a year or two from now, right? And they'll burn through all their money and they won't be able to get money or something like that, right? But the one thing I'll say about Fubo is if they can continue to pull down these losses over these next couple quarters and they show everybody, hey, we got plenty of cash around, we're bringing down the losses, we continue to bring them down and down and down, right? This stock could 2x quickly, just like Honest did. Honest went from $1 to nearly $3, like snap of fingers, right? And why did it do that? It did that because people went from a stage where they were concerned that this company was going bankrupt, right? To, oh, they're not going to go bankrupt. They're going to make it out to the other side and, and go from there. And so you just got to understand with Fubo, it's a big risk stock, but man, it's a big reward stock. I mean, it's the reward potential there is pretty insane, just very, very insane. But they got to get rid of the thought process that this company could go BK. And the only way you do that, bring down that net loss, folks, okay? Hope you enjoyed today's video. Talking about 12 stocks there. That was a beast of a video there. Appreciate y'all joining me as always. If you enjoyed this video, you're going to enjoy my private group like 50 times as much, okay? Pin comment down there, fill out an application, and you can join us in there, get access to all my best course curriculums, teaching you everything I got up here, how I identify stocks, how I figured out if stocks are undervalued, overvalued, all those sorts of things, access to my 6- and 7-figure Discord chat, all that good stuff. Pin comment down there. Much love and have a great day.